Hi, welcome back once again to Cbse Board Economics. My name is Saddam Hussain. In the last class, we discussed the estimation of national income by product method. We call it also as value added method or net output method. To refresh your memory once again, I give you the steps. The first step is classification of industries. All the industries have been classified into three categories: primary sector, secondary, tertiary sector. The second step was classification of gross value of output at market price. How do you get that? Sales plus change in stock. The third step was estimating gross value added market price. Gross value at market price is equal to gross value of output at market price minus intermediate consumption expenditure. The next step is estimating net value added at market price. How do you estimate net value at market price? By subtracting depreciation or consumption of fixed capital from gross value added at market price, we get net value at market price. The next step is estimating net value added at factor cost. How do you find out net value at factor cost? By subtracting NIT, net indirect taxes, that is indirect taxes minus subsidies, you get net value at factor cost. The next step is, which is of course I told you is an important step, estimating NDP at factor cost. How do you get NDP at factor cost? By adding the net value at factor cost of all the three sectors, that is the primary, secondary, tertiary sector. That is net value at factor cost of primary sector plus NV at FC of secondary sector plus NV at FC of tertiary sector, we get NDP at FC. And the last step is estimating NNP at FC or national income. By adding NFIA to NDP at FC, we get NNP at FC and national income. Later, we discuss the precautions of the product method. Which are the precautions? Let's refresh your memory once again. The first precaution is we should not take the value of second-hand goods, otherwise it leads to the problem of double counting. Number two, we should take the value of only final goods. That's why the national income definition is the total money value of all final goods and services produced in an economy in an accounting year. The third step is sale and purchase of second-hand goods should not be included, because their values have been included in the year they were manufactured. The fourth precaution is, however, if you are paying commission and brokerage to second-hand dealers, that should be included. The fifth precaution was imputed rent of owner-occupied houses should be included. The next one is value of goods kept for self-consumption should be included. And the last precaution, which is seventh precaution, is own account production of fixed assets should also be included. So those were the precautions, those were the steps involved to estimate national income by product method, which we have seen in two separate episodes of videos. I am sure you must have followed. Now today we have a small formula to help you to do the numericals. Of course, I will be helping you to solve the numericals in the next video. Today I just introduce you the formula, which is nothing new, which you already know. In case they ask you estimate national income by product method, use this formula. That will really help you. It's a ready-made formula. So product method or value add method formula to find out national income or domestic product or GDP, NDP, let them ask you anything. So they give you the values like this: sales plus change in stock. Change in stock can be closing stock minus opening stock. Just keep in mind, we'll be practicing numericals. Next formula, sales plus change in stock. These sales can be domestic sales or can be exports. In case they give you domestic sales separately, please don't forget to add exports. If you have only sales, then don't take the value of exports because they have already been included in the sales. So the first one is sales plus change in stock will give you gross value of output at market price, GVO AT MP, minus intermediate consumption expenditure. that is value of raw materials. If you subtract intermediate consumption expenditure, you get gross value added at market price. And from gross value at market price minus depreciation, which we call it as consumption of fixed capital, we get gross value added at market price. From the whole economy's point of view, this gross value added at market price, you can call it as GDP at MP. If you want here, just give you this GVO at MP, you can call it as GDP at MP from the whole economy's point of view, gross domestic product at market price. Now this gross value added at market price, this is again, no, this will become gross value at market price minus depreciation, it will become net value added at market price. This we can call it as NDP at MP, net domestic product at market price. Sorry. From this net value added at market price by subtracting NIT, NIT is IT minus subsidies, which you know it, indirect taxes minus, you already familiar with this, subsidies, you get net value at factor cost. This you can call it as NDP at FC from the whole economy's point of view. This NDP at FC is NV at FC of primary sector plus secondary sector plus tertiary sector. So NV at FC, to this if you add NFIA, net factor income from abroad, NFIA has two components, factor income received minus factor income paid to abroad, you get NNP at FC and national income. I repeat the formula once again. First is, in case they ask you to find out GDP, NDP, NNP, GNP, national income, national product, anything, you just go by this formula. Sales plus change in stock will give you gross value of output at market price minus intermediate consumption expenditure, gross value at market price, which is nothing from the whole economy's point of view, GDP at MP minus depreciation or consumption of fixed capital, we call it as NV at MP or NDP at MP. From NDP at MP, this you can call it as this NDP at market price. From this you subtract NIT, net indirect taxes minus subsidies, NV at FC or NDP at FC. This NDP at FC of primary sector plus secondary plus tertiary sector. To this you add NFIA, you get NNP at FC or national income. This is the same steps which you have done, but we are putting values here. This will help you for numericals. To put it in simple words, sales plus change in stock, GVO at MP, it will give you GVO at MP. From GVO at MP minus intermediate consumption expenditure, GVA at MP. GVA at MP is nothing but GDP at MP. From GVA at MP minus depreciation or consumption of fixed capital, NVA at MP. From NV at MP minus NIT, NVA at FC. NVA at FC is nothing but domestic income. To this you add NFIA, you get NNP at FC or national income. In case they ask you to find out GNP at MP, once if you get NNP at MP, to this you add depreciation, it becomes GNP at FC. If they ask you GNP at MP, you add depreciation once again and NIT, you keep on adding and subtracting, so you get the values or GNP, GDP, NNP, whatever you want. So basically there are three things here. If you have gross value, if you subtract from this depreciation, it becomes net value. If you have it market price, to get it to factor cost minus NIT, or the other way around, from factor cost to go to market price, add NIT. From net value to go to gross value, add depreciation. From domestic value to go to national value, add an NFIA. The other way around, from national income to domestic income, you subtract an FIA. That's it, very simple. So sales plus change in stock will give you gross value of output at MP minus intermediate consumption gross value added at MP minus depreciation net value added at MP minus NIT net value added at factor cost, which is nothing but NDP at FC. To this you add an FIA, NNP at FC or national income. So the practice of national income, will do it later on the board. Right now, please remember the formula. So the entire product method is over. In this method, you have to remember steps involved to measure national income by product method, and then the next one is precautions to calculate national income by product method, and the last one is the formula. That's all we have time for today. Till we meet next time, it's goodbye from Saddam Hussein. Don't forget to subscribe, share, comment and like our videos. Until we meet next time, best of luck for your exams. Bye-bye.